Good morning, good afternoon, or good evening, wherever you may be, and welcome to today's webinar on Asia Pacific Tourism Outlook 2026 to 2028, Growth Under Global Uncertainty. First, let me introduce myself. My name is Paul Brangan. I am Director of Marketing and Communications here at the Pacific Asia Travel Association, and I will be your host for today. Now, before we get to today's webinar with some fantastic speakers from OAG, Euromonitor, and Hong Kong PolyU, I do have one quick housekeeping note I'd like to share with all of you before we begin. I know many of you are familiar with Zoom, but just as a refresher, if you'd like to submit any questions to our speakers, please use the Q&A function as shown on your browser at the bottom of the browser there. If you have any questions, please do not use the chat function, but use the Q&A function. For the chat function, feel free to comment about the presentation if you wish, say hello to their delegates. However, for questions for their speakers, please use the Q&A function as shown on your screen. Now, we have a lot of people for today's webinar on a very interesting subject for what happens in the coming years regarding travel and tourism. So without further ado, let me introduce our first speaker up for today. Ladies and gentlemen, please welcome the Commercial Industry Affairs Leader for Asia Pacific, Middle East, and Africa at OAG. Ladies and gentlemen, please welcome, he's also our Executive Board member. Ladies and gentlemen, please welcome Mayur Patel. Mac, over to you.
Thank you, Paul. And good afternoon, everyone. Let me just bring my slides up. Let's give me a take. Okay, so good afternoon, everybody. So today we'll be discussing forecasting demand in today's world, so navigating uncertainty in a complex world. So what does this mean from an aviation perspective? There's changing market dynamics. Asia Pacific, so we'll look at some statistics and how that compares to the rest of the world in terms of profitability and the growth levels that we anticipate in the next few years. We look at the market dynamics, so we look at international as well as domestic, and Asia Pacific generally has a very heavy domestic market reliance. And how does that impact some of the international connectivity into the region, as well as looking at the intensity of competition in key international markets, given the fragmentation of the regions that exist in this region, as well as China playing a defining force in the region itself, geopolitics and how that's reshaping capacity flows, aircraft order, and looking at the decade of structural transformation. So first of all, I'd like to address how the market is changing in front of us. So if you were to compare recovery since 2019 level, just before COVID had started, we're about 14%, and that's in line with the historical levels. So the growth is coming along quite fast, and you can see that some of the sub-regions are recovering at a much faster levels than other sub-regions, especially when you were to compare the winter season of 2025 versus 2019, as well as 2024. But the airline industry is experiencing extreme volatility over the last 2 years. So we've reached the peak of the recovery, and then there's other geopolitics factor, supply chain issues that we are entering into, and that could prolong for many years to come. So again, airlines have no long-term plans because they're quite restrictive in terms of how the aircraft orders will come in and fulfilled, and their ability to add capacity in the years to come. But one significant light at the end of the tunnel is that we are growing in line with historical levels. So that's good to see that the industry is quite resilient and that growth has come back into the market. As you can see in the table below, Southeast Asia still lags behind when you compare to 2019. And that's purely because some of the airlines have not come back fully from their recovery pace in certain markets, especially the domestic and international recovery. And so, but overall, quite positive, but there's a bit of headwinds moving forward. Industry forecast highlights Asia Pacific weakness. So if you were to compare the net margin comparison between different regions, Asia Pacific is at $3.20 US per passenger, And when you compare that to other regions such as Middle East, which is at the highest $28.60 per passenger, you can see that there are structural changes in terms of financial results. And when we talk about Asia Pacific carriers, it's not to say that all airlines are in a weaker position. If you were compared to the likes of Cathay Pacific, Singapore Airlines, and Qantas, they're seeing record profits being announced at current pace. So we'll look at, for example, Cathay has come back and said that their profits will be at record high, given their solid performance last year. Qantas today actually announced their highest first half results of about $1 billion US dollars. And Singapore Airlines earlier this week had reported record revenue in its quarter three earnings. So I think there's a lot of good momentum from legacy carriers. And these carriers were hard impacted during COVID that has come back in a very strong and resilient manner. So the critical issue here is for Asia Pacific is that IATA is expecting 7.3% traffic growth in the region, but the net margins are reducing. So we'll probably see worthless growth this year overall. So APAC's domestic focus. So if you were to take all the capacity and divide that into international domestic, you will see that domestic is about 71% of the total market and 29% is international. So there's a lot of traffic capacity that gets built up. In the top 10 markets, you will see that out of that, 7 domestic capacity is 2 times the international capacity. So that creates a fundamental challenge for Asia Pacific region. So you can see from the graph below the distinction between different markets and their comparison between international and domestic splits. So domestic operations are really profitable for airlines, especially when there's multiple airlines operating within the domestic base. And if you were to compare that against US legacy carriers, they're more successful and profitable because there's no more than 3 carriers operating per route. So it's a bit more regulated and there's more capacity discipline in United States domestic when you compare that to Asia Pacific region. So Asia Pacific's most profitable airlines are focusing on international development. That's where the money is, especially in the premium segment, and that's avoiding the domestic distractions. Again, when we look at international country pairs, so again, that's recovered beyond the pre-pandemic levels. And Japan, South Korea illustrates how it's been a very strong performer, but that needs to be viewed a bit more cautiously because you've got a lot of low-cost carriers that are operating between Korea and Japan. And that's come into our OAG's top 10 international routes this year, where you've looked at Incheon, Seoul Incheon to Osaka, as well as Seoul Incheon to Tokyo Narita. It's featuring in the top 10 world's busiest routes. Again, you've got somewhat of 10 low-cost carriers operating between the 2 countries, so there's heavy competition. And moving forward, the question is, will there be a consolidation? And we'll probably see some sort of consolidation, as we have heard in South Korea market, where Asiana and Korean Air is merging. And along with that, some of those respective LCCs, the low-cost carrier, will merge into those operations as a result of that, and there'll be some consolidation that will influence that. Then there's the China's influence. So China features in the 5 of the 10 largest Asia-Pacific country pairs. So that's exerting considerable influence in capacity and demand through geopolitical activity. And what we've seen in the last year or so is that there's a lot of capacity that would have gone otherwise into the United States. It's actually shifting into Asia Pacific and some capacity moving into Europe. So you can see that China Eastern recently announced a route that went from Shanghai, Auckland to Buenos Aires. So they're looking at very creative city pairs to offset some of that geopolitical countries where they've lost capacity over the past 2-3 years. So again, talking about China's position of influence, it's very important because we've got about 390 million seats in this current winter season. And that compares to about 3 times larger than India, which is second placed. And if you were to compare that to Singapore, which is a small market, but a very important market in terms of air connectivity and its dominance, it's about 21 times larger than Singapore market. Again, few factors there. It's regional dominance. Again, China dominates the Patel region in international capacity. There's optimistic growth. So we'll look at more developments in international capacity in a very optimistic manner. Again, that's purely because there's a lot of regional opportunities out of China into the other parts of Asia Pacific. And then there's the Chinese government control, which dictates how the air services are allocated and where the capacity is grown accordingly. And there's always the trade leverage. So if you look at the aircraft orders, they're linked to wider trade relations. And Airbus, being a European consortia, they get a greater market share out of the Chinese carriers compared to Boeing, which is a US-based manufacturer. So again, China plays an important and significant role in terms of how traffic moves around and how that pivots into different markets, and how geopolitics can actually play an important role in the whole mixture of demand creation. And again, you can see from the figures here how big the Chinese market is. As I mentioned earlier, it's just over 3 times larger than India, which is second place. And then you can see the growth levels that we have seen from 2019 versus 2025. Chinese market is growing when you compare that to 2019 at about 33.4%. And if you were to compare it to last year, it's still growing at 4.2%, which is quite a general trend in capacity growth with any market or with airlines adding capacity into their network. So the China-Japan dispute, so we've heard a lot about this in the past few months, where there's been political tension between the two countries. So that's resulted in the Chinese authorities telling local airlines to withdraw capacity between the two countries. So the graph on the other side of the slide will show you the decrease in the Chinese carriers' capacity from China to Japan, whereas the Japanese carriers continue to operate their normal capacity levels because it's already at a very low base. So the impact is not that significant. And a lot of that traffic is for international connections from Japan to other parts of the world. So I think the Japanese carriers are quite nimble and agile in terms of how they're managing their capacity in this dispute at this current moment. And in the space of 4 weeks, we have seen airlines reduce their capacity by about nearly 60,000 seats per week. So again, it's stabilized off a little bit from its record highs, but it's still about half of what the planned capacity was at the beginning of December 2025. So Japan's loss is Australia's gain for the Chinese carriers and Australian carriers, where they've been able to secure more seats into Australia as a result of the trade dispute between China and Japan. So that gives a bit of network flexibility for the airlines to plan and adjust the capacity based on some external factors, such as the geopolitics. And there's capacity reallocation. So again, the Chinese New Year, the Lunar Year, the Chinese carriers were actually able to increase their capacity quite rapidly and pivot across their network and to other regions in the Asia Pacific region. And that also allows for tourism adaptation in terms of travel in APAC will increasingly shift to new markets based on any geopolitics, as well as any policy shifts like visa extensions that the countries have provided in the past. You will see demand shift according to that. And we've seen new markets being developed as a result. We've seen Vietnam rising quite rapidly in recent years. Thailand, Malaysia, Singapore still has gained attractions as a result of the visa policy. And we will see some impact from the currency in the short term, where some of the losses from the Japan tourism will actually pivot to other directional demand in the coming months and maybe a few years from now. Aircraft delivery also drives market growth. So although we spoke about geopolitical events, exchange rates and GDP and fashion are all factors in demand. And growth is primarily driven by new aircraft and added capacity. So at this moment, we have seen a lot of airlines add capacity, and all those aircraft orders translates to about 1 billion seats that we will add over the next decade. And you can see in the graph where those distribution of the splits are. And there's significant orders in Southeast Asia. And then as we move forward into 2030s, you will see that India, the South India, significant order books have been placed by Air India and Indigo, and that all that aircraft will come in, and we will see some new city pairs and international, as well as long haul, as well as regional capacity that will be added accordingly. So there's a lot of different opportunities in the market where we will see airlines cut prices to fill those seats. And again, profitability in the region will unlikely be improving over the next quarter. So I think what we have talked about earlier, that will stay on for the next couple of years to come. So this means that Asia Pacific's aviation market will stay volatile, with new airlines starting up and others shutting down, and we will go through the natural industry cycle as we move forward in the years to come again. So again, aircraft book orders that will also depend on suppliers being able to get that aircraft to airlines on time to ensure that the capacity discipline of 5%, 3 to 5% can be a sticky point in terms of their planning into the years to come. So again, to conclude, it's a big decade of change in Asia Pacific. So again, Asia Pacific market will look very different in the next 10 years, or possibly sooner, depending on different factors, whether it's geopolitics, whether it's a supply chain issue, or is it any other market developments that will actually provide opportunities, or it may derail some years from there. So one factor will be the next generation extra large range aircraft, the narrow body, opening up new routes, allowing airlines to fly further and attract new travelers and creating new city pairs. So where we've seen a lot of opportunities in this area is secondary cities and city pairs being opened up that were previously going through another hub, a connecting point, which means that it extends the actual duration of that flight or the passenger's total elapsed time, and that narrows that down through a direct service between two different city markets and expanding that into new opportunities for the tourism industry. New airports are expanding capacity, including Sydney West this year, and the recent opening of Mumbai and Delhi, and 18 major projects underway in China. And we've got Changi Airport that's also developing Terminal 5, that's going to increase capacity as we move into mid-2030s. Seoul Incheon Airport is adding additional terminal. Hong Kong will open the new terminal in the months to come, as well as new capacity for number of aircraft movements with its third runway. So that all of these different airports in Asia Pacific will provide opportunities for airlines, as well as new city pairs and new airline models to come in and create new traffic opportunities for the industry at large. Then you've got Qantas doing the Project Sunrise, which will provide ultra-long routes like Sydney-London, as well as Sydney to New York, which will become more common on how the Airbus A350-1000 series is used and becomes more widely available, and to operators such as Qantas, Cathay Pacific, Etihad, and the likes. And travelers will become more flexible and adaptive in how they plan their trips. So again, technology will change that, and how AI will play an important role in the digital space on how travelers interact with booking sites, as well as how they distribute airline products across different channels. So while we plan for 2026 and beyond, the best approach is to stay ready for any unexpected so that it doesn't catch you off guard. So I think there's a lot of opportunity in this part of the world in terms of the projection, the forecast that we see that will enable the tourism industry to flourish. And there'll be different dynamics in terms of the intra-regional traffic growth, as well as international connectivity through different hubs, and looking at different opportunities on direct flights, whether that's short, medium, and long haul into our region. So I think we can be quite optimistic, but at the same time take a caution in terms of the profitability and the impact that that has on how airlines operate and how they pivot to different modes of travel distribution and the opportunities that all represents at a broader level. So again, thank you for your time. And if there's any questions, we can take that further during our webinar session. Thank you.
Well, thank you very much, Mac, for that very insightful presentation. If you actually like to hear more from Mac, he will be one of our speakers at our upcoming PATA Annual Summit in Korea in May 11th to 13th. So if you haven't registered for the annual summit, please re-register today. You can hear more from Mac and actually meet him and ask him questions directly face-to-face as well. So thank you very much, Mac. And now move on to our next presentation. So with that, ladies and gentlemen, please welcome our next presenter. He is the Mr. and Miss Chan Chak Fu Professor in International Tourism in the School of Hotel and Tourism Management and Director of Research Center for Digital Transformation of Tourism at the Hong Kong Polytechnic University. Ladies and gentlemen, please welcome Ms. Professor Haiyan Song. Professor Song, over to you.
Hi, hello. So yeah, I need to bring my slides up. Okay. All right, this is not the first one. So let me go back. Okay, good evening, everyone. Actually, I'm going to present the latest PATA visitor forecast for 2026-28. Due to time constraints, I can only present the highlights of this forecast. But if you are interested in the full report, as well as destination-specific report, you can contact PATA for those reports. So I'm going to go through these four sections today. I will give a brief introduction to the background of the forecast, and then I will highlight the inbound forecast to Asia Pacific, and then outbound forecast out Asia Pacific, and then some takeaways from those forecasts. Basically, the forecast is generated under the following conditions. First, the tourism demand has recovered from COVID-19, but there's still challenges face the tourism demand in the region, especially economic and geopolitical factors influence the forecast considerably. And also the policy and destination visa facilitation will also play roles in terms of shaping the future of tourism demand in the region. And also environmental and climate considerations also will be a factor that considered in the forecast. Of course, we are facing a digital transformation of tourism in almost every country within Asia Pacific. So in terms of it is a push influence on the future tourism demand, digitalization also play a role. And also we will look at the post-pandemic tourist behavior, especially some of the travel behavior has changed due to first the influence of pandemic and also technology. So the key effect from this forecast as actually we can see the recovery of the Asia Pacific region is expected to reach 710 million by end of 2026, which is 104% of the pre-COVID level. The total visitor arrivals are expected to hit 765 million in 2028, which will be 11.5% more than 2019. So this actually is good news in terms of a recovery. In terms of the top destinations within Asia Pacific, actually this table presented the top 10 destinations within the region. China, of course, is the number one destination for international tourism, either from 2026 to 2028, followed by USA, and then Turkey, Hong Kong SAR, Mexico, Japan, Macau, Thailand, Malaysia, and Vietnam. Those are the top 10 destinations in the next few years that will see a huge amount of tourists traveling to. In terms of methodology, actually, I'm going to very brief on the methodology. Actually, the forecast is a two-stage process. So in the first stage, basically, we use econometric and statistical models to generate a forecast based on the historical data. But due to the influences such as policy, visa facilitation policy, and also geopolitics, there's a need to make necessary adjustment. So we will, if there's a need for adjustment, then we will actually engage tourism forecasting or tourism expert to adjust the forecast to the baseline forecast if there's any significant influence by policy, by visa facilitation, or by geopolitical event. So these are the destinations within Asia Pacific that we generate a forecast for. In the Northeast Asia, we have 7 destinations, and Southeast Asia, 9 destinations, Pacific 13, South Asia 5 destinations, and the Americas 4 destinations. West Asia actually is only 1 country, which is Turkey. Let's look at inbound forecast first. In terms of the grand total, after 2028, from this year, we are no longer doing the scenario forecast as we did during the COVID-19 period. Actually, we are doing we call it probabilistic forecast, or forecast with probability regions. But basically, we will first look at the baseline forecast, and then we will look at 90% interval, upper bound and also lower bound. So according to this forecast, by 2028, actually Asia Pacific will recover to the COVID-19 level by 111.5%, which is 11.5% higher than pre-COVID level. But of course, there are also a possibility where you will see 134% increase, which will be 918 million tourist arrivals into the region if everything goes well. But if there's a lot of uncertainties and there's many negative factors may influence, the forecast can be as low as 87% compared with pre-COVID level. Basically, on the right-hand side, I listed the drivers of the future tourism demand in terms of increase, and also the challenges if things goes wrong. For example, the travel cost has become increasingly more expensive for people to travel internationally. And this actually is a negative factor or influence future demand of tourism in the region. And also geopolitical conflict destination safety are another two factors that may negatively influence the demand for tourism in the region, and also environmental concerns. So this is the grand total forecast. But in terms of sub-regions, I only choose some of the regions to report here. For Americas, actually, Americas is the slowest recovering region. Actually, the recovery remained 100.6% in 2026. Basically, it just returned to pre-COVID level. By 2028, there will be around 162 million visitors traveling to the Americas, which is 7% more than 2019 level. North American airlines follow the principles of high-yield passengers, prioritize a mixture of business and VFR demand, resulting in limited but steady passenger growth. So the business travel and the visiting friend relative travel will be probably dominant the trend. And also sustainability requirement increase the marginal cost of tourism capacity, leading to a slow growth. We know traveling to the US can be very expensive. Not only the inflation influence in the destination, but also travel costs due to other reasons will increase, which will negatively influence international arrivals to Americas. In terms of Northeast Asia, among all Asia-Pacific sub-regions, Northeast Asia features the largest market share since 2027. Remember, in 2022, just before the opening up after COVID, actually, Northeast Asia, actually the percentage of market share is only 15%. But by 2026 and 25, actually Asia Pacific will occupy the largest market share within Asia Pacific. The full recovery by 2026 actually is already achieved, and also by 2028, Northeast Asia will receive about 335 million tourists at that year, and it can be between 273 or 392, depending on the factors that may influence the demand. For South Asia, among all APEC sub-regions, South Asia features the smallest market share. It's only 2.5%, which will probably receive 18 million arrivals by 2026, which is 13% higher than 2019 level. So there will be around 20 million visitors travel to South Asia by the end of 2028, which is 124% of 2019 level. The increase of tourist arrival in this region actually are determined by natural resources and cultural resources, and also relative lower travel costs to this region. These are the positive factors that drive the growth of tourism arrival in this region. In terms of Southeast Asia, visitor arrival to Southeast Asia will recover to 2019 level by the end of 2026. Southeast Asia will receive 156 million visitors in 2028, which is about 10% higher than 2019 level. Again, the natural and cultural resources and also the supportive policies by the government in this region will play a positive role in promoting tourism demand growth in this region. However, there may be some safety and destination image issues may play a negative role in this region due to conflict between countries, and also some scammers which has been financial scammers or online scammers, which has been reported in the media, may actually play a negative role. In terms of West Asia, visitor arrivals to West Asia will far exceed the pre-COVID level in 2026. Actually, this is the fast recovering sub-region within Asia Pacific. So by 2026, actually the arrival is already 23.9% more than 2019 level. Actually, the Go Turkey brand actually marketing strategies effectively enhance international awareness, which will drive tourism to this destination. And also the pronounced seasonality and also certain attractions probably were heavily affected by climate, which will limit the tourism growth due to global warming. And also in the Pacific, visitor arrivals to the Pacific will outperform the 2019 level in 2026, just by a little, only 1% higher than 2019. In total, there will be 29 million visitors to travel to the Pacific by 2028, which will be a 6.06% higher than 2019 level. The attractor of this destination is due to its unique nature resources and also rich cultures. These are the predominant factors that will drive tourism to this region, but there are some negative factors may play a deterrent role, such as the disasters and also other safety factors may also play a role in terms of negative influence tourist arrivals in this region. Now let's look at the inbound forecast. I will just present some destinations highlight. In terms of USA, visitor arrival to US reached 19.49% and 96.6% of 2019 level by the end of 2026 and 2028. Perhaps this is the slowest recovery region among the whole Asia Pacific region. Canada and Mexico are the predominant source market for destination for the US. Actually continue to dominate the US inbound market. So Canada and Mexico are the main source market for US. And also travel restrictions and entry ban implemented by the US government may negatively influence the tourist arrivals into the USA. But on the other hand, 2026, the World Cup is expected to generate perhaps substantial tourism spending and arrivals, which may boost tourism arrivals in the US. In terms of China, in the short run, China will receive 146 million tourists, which is 93.6% of the 2019 level. By the end of 2028, it will reach 96.35%. So it's still actually quite stagnant in terms of increase in terms of arrivals in China. Hong Kong, Macau remain the largest source market for China. China has gradually expanded the number of countries eligible for visa-free entry. This may play a positive role in attracting international visitors to China. So we'll see what this policy will influence arrival from Europe, America, and Australia in the future. In terms of Thailand, Thailand's arrival will recover to 97.4% of pre-pandemic level by the end of 2026, not fully recovered yet. By 2028, the arrival will reach 42.6 million, which is 6.6% higher than 2019 level. China will become Thailand's dominant source market by the end of 2026, because Chinese tourists now actually become a major source market for Thailand again after COVID-19. The border tension between Thailand and Cambodia may negatively affect tourism perceptions, which may play a negative role. And also, Thailand is set to host 20th Global Wellness Summit and also Tomorrowland, which is a music festival that will generate additional arrivals in 2026. In terms of India, tourism arrival actually to India will recover by 107.3%, 117.4% by 2026 and 28 respectively, compared with 2019. The inbound market structure is relatively stable. Bangladesh and the USA are the predominant source market for India. Over the past year, India has experienced natural disasters like heavy rainfall, flood, and landslides, which actually affect the tourism infrastructure, which may play a negative role. And Indians expanded the e-tourist visa to 166 countries, which may actually positively influence tourism traveling to India, because the visa process become much easier as a result. Japan is the fastest inbound growing destination in the region. The forecast has been very encouraging, 150%, 168% as compared to pre-COVID level in 2026 and 28 respectively. China and Korea are the predominant market for India. But recent tension between China and Japan may actually negatively influence tourism arrival from China to Japan. I think this is due to time constraint. I only have less than 1 minute remains, so I will go through the departure in terms of the top departures from a couple of countries, for example, China. With the departures, actually, Hong Kong and Macau are the number one, number two destinations, followed by Thailand, Japan, Korea, Vietnam, and so on and so forth. So China will be a major source market for quite a number of destinations within Asia Pacific. And the table here actually listed where the Chinese tourists will go and what is the market share at the in different years. In terms of Japan, actually, USA, Korea, China, Chinese Taipei, and Thailand are the main destinations for Japanese tourists. Okay, so there's some changes in terms of the ranking of the destinations over the next few years. For example, USA is ranked number one as a destination for Japanese tourists. By 2028, it become number three. But other destinations perhaps remain relatively stable. For USA, Canada, Mexico, Hawaii, and China, Japan, India are the top destinations for US tourists. This actually, the ranking also is relatively stable, although there may be small changes over the next few years. For Korea, Japan, China, Vietnam, US, and Philippines and also Thailand are the top destinations for Korean tourists. The ranking relatively stable. There may be one or two changes, especially related to Guam, but the rest of the destinations, their ranking remain stable. So the key takeaways for the overall Asia Pacific international visa arrival 2026 project, the 24 out of 39 destinations I expect to recover fully compared with 2019 by the end of 2026. So still quite a number of destinations will not be able to recover to the pre-COVID-19 level within the region. 2028 projection, there will be 761 million visitor arrivals to the region from different source market. You can also look at the upper bound and lower bound forecast. But the most realistic forecast will be the baseline forecast in our view. And 2019 with the in terms of sub-region forecast, Northeast Asia restored its market share of 44% versus 15% in 2022, right? So actually, Northeast Asia will still be the major destination for international visitors. West Asia will be recover fastest. So in terms of recovery rate, is 133.6% in terms of West Asia. And South Asia, the recovery will be 124% in 2028 compared with 2019. The Pacific region shows the slowest recovery, only 6.8% compared with 2019, 2028. The source market structure. So in terms of the main source market, China, Hong Kong, USA, Korea, Canada, Mexico are the key dominant source market for all countries or regions within Asia Pacific region. So these are the presentation, but if you are interested in the details of the forecast, you can contact Patel for the full report and the destination specific report. Thank you very much.
Thank you very much, Professor Song, for that presentation. And moving right along, we'll get to our next. Can you stop sharing, Professor Song?
Right, I will stop sharing.
Okay, I'll just share my slide real quick. We've got to our next presenter. Ladies and gentlemen, please welcome the Global Insight Manager for Travel at Euromonitor International. Please welcome Mr. Stephen Dutton. Stephen, over to you.
Thank you so much, Paul. I'm thrilled to be here. Let me just get my own screen. Slides up on the screen. Hopefully that's sharing.
Yep, looks good.
Perfect. Thanks, Paul. Yeah, thanks everyone, and thanks for that introduction. As I said, I'm really thrilled to be here. Really great first two sessions. I've already learned quite a lot, and I think we'll have something to add in this session as well. So we'll be using this final session to talk through another really big topic, which is growing uncertainty in the world. That's uncertainty from a geopolitical perspective, uncertainty from a socioeconomic perspective. We as consumers are confronted with the growing regularity of global challenges that impact our choices in travel. So it's a really important theme. But the good news is that travel is proving to be resilient. So consumers are still spending well in travel. There are some unique opportunities emerging in APAC in particular, and the one we'll zoom in on in this presentation is the idea of intra-regional travel. So more APAC travelers traveling within APAC, making cross-border trips that are effectively closer to home. So that's a trend that stems from the pandemic, but it's evolved since then to become a critical driver of travel spending in the region. So just a really quick word about Euromonitor. We're a global market intelligence firm. We specialize in all kinds of different consumer products and services industries, including travel. We're based in London, but we have 16 global offices worldwide, including 6 in APAC, and I'm actually based in our German office in Düsseldorf. Beyond our 16 offices, we actually have analysts who are on the ground in 100 countries around the world, which they're doing the research, they're speaking local languages, they're collecting all the right data, and that gives us a really comprehensive understanding of what's happening in travel globally. And just a really quick word about me, I'm a Global Insight Manager, which basically means that I direct our global travel research and our insights program. And my day-to-day is effectively using our travel data to write reports, to generate thought leadership, present at conferences, and to engage our clients with critical travel insights. I'm a career analyst, and I've been with Euromonitor since 2015. So I'm going to set the stage and provide a little context for the insights to follow. by starting with three key stats. So the first two come from our annual global travel survey called Voice of the Consumer. And the first is that 35% of consumers in APAC say that they believe the world will be a more dangerous place in the coming 5 years. That's actually a little less than a global average, but it's still an alarmingly high percentage of consumers that are anxious about growing uncertainty in the world. Now, almost paradoxically, in the second stat, 28% of consumers in APAC expect to spend more on travel in the year ahead. So travel for these consumers is becoming a kind of critical antidote for these global challenges. Now, travel is a means to escape the day-to-day burden of uncertainty, and it offers a way to explore the world in a positive way, almost like taking back the narrative from the headlines that we regularly see in the news. And when travelers take trips in this way, in this context, they do so more meaningfully and in a way that adds real value to the industry. So in this last stat, you can see that we expect over 300 billion US dollars in new travel spending over the next 5 years across APAC, which is a big opportunity, I think, for everybody listening in on this webinar. And one of the greatest shifts that we see in traveler behavior is this. It's intra-regional travel. And I'm offering a definition here, basically that more and more travelers are choosing to fly to destinations that are a little closer to home to reduce the risk of encountering challenges, to reduce costs, and because since the pandemic, when consumers were really only able to travel locally, people are realizing that you don't need to fly halfway around the world to have an incredible holiday. There is a lot to explore more locally as well. Now, importantly, in this last sentence here, it also represents a reshuffling of inbound tourism demographics, meaning if you're a destination in APAC, you might notice that your target audience is changing. It's good to be aware of this, and then, of course, to adapt and to pivot your offerings to cater to this emerging demographic. And we see how big intra-regional travel is in our data. So you can see in the chart here that by far the majority of trips being taken in APAC are from APAC travelers. And it's also the fastest growing inbound segment. So over the next 5 years, more new trips will be taken within APAC from APAC travelers than from all other regions combined. In 2025, intra-regional travel represented 68% of travel spending in the region, and 5 of the top 7 source markets are all APAC countries. So as we mentioned, intra-regional travel is a function of growing uncertainty in the world and the growing regularity of challenges. And here, I'm listing out some geopolitical challenges that impact travel directly. So for example, there are no-fly zones in the world. Finnair routes to Asia are up to 40% longer as a consequence. There is also, unfortunately, armed conflict in the world that has a spillover impact on tourism flows. So conflict in the Middle East has had a negative impact on inbound arrivals to Jordan in 2024, even though there's no conflict in Jordan itself. There are also new visa fees in the UK, where a new ETA fee and process was introduced last year, which just adds another layer of complexity and friction in the booking process. Similarly, there are new proposed entry restrictions to the US, where visitors might have to provide up to 10 years of social media history for visa approval. You can imagine that APAC travelers considering the UK or the US for their trip are now facing another layer of complexity that could discourage them from ultimately choosing these destinations. But there are geopolitical challenges in Asia too. We already talked about this earlier in the session. You're probably aware that approximately 500,000 flights were canceled in just 3 days in November between China and Japan. These broader challenges influence consumer choice in travel, and many are choosing to stay closer to home as a result. Now, another challenge facing APAC destinations is the idea of existing dependencies on the Chinese outbound market, which has traditionally been a huge driver of travel spending in the region and indeed the world. But an over-dependency on Chinese visitors can leave destinations vulnerable when arrivals from China slow. So China, for example, was slower to open as a market in the wake of the pandemic, both in terms of inbound and outbound travel flows. And growing economic uncertainty in China has also put a question mark on China as a source market. And that's what we're looking at in this chart. So here I'm leveraging data from our travel forecast model, which models the likely impact of future travel flows based on different economic scenarios. And so this is what would likely happen in the event of an economic slowdown in China, basically creating a negative impact primarily to the markets shown here, all in APAC, as a means to illustrate the dependencies there are to the Chinese outbound market. So countries like China itself, of course, but also Thailand, Japan, Malaysia would be impacted. Now, again, to be clear, this is hypothetical. This is a model based on the scenario, but it's also good to know, and it can help destinations better prepare for different scenarios and also potentially diversify their target demographics as a means to sort of build resiliency in this context. And we do see this happening already. So a slowing of Chinese outbound flows and a growing sort of level of global uncertainty have effectively forced APAC destinations and APAC travelers to pivot. Now, travelers are discovering suitable options closer to home. And as a result, we're seeing new intra-regional opportunities emerging, new travel corridors with some compelling bubbles in Southeast Asia and in Central Asia. So in this chart, we're looking at some of the largest expected growth corridors, and you can see many connections to and within Southeast Asia and Central Asia here. Now, this is providing really interesting opportunities for travel operators in the region. So Air Asia X, for example, has nearly doubled their sales since 2019 by specializing in this sort of mid to long haul, low cost carrier space to both drive value for value conscious consumers, but also by exploring new air routes in the region that have facilitated so many new travel opportunities in Southeast Asia in particular. There's also an important value versus volume growth story here. In most markets, value is outpacing volume, which is a healthy sign for travel growth. In Hong Kong, for example, recovery since the pandemic has been volume driven. And part of that is due to geography, given that Hong Kong makes for a seamless day trip from China. But there are also ways to grow spend per trip as well. So one way is to tap into consumer sentiment for experiences. And we see that 59% of respondents in our survey in APAC agree that it's important to spend money on experiences. Another way is to attract travelers within these emerging corridors, of course. So from a value perspective, we see a lot of opportunity from two source market regions in particular, one in the GCC markets and also one from North America. Now, some of the fastest growing travel corridors are from the GCC markets, like the UAE, Saudi Arabia, and Qatar to Hong Kong. And the highest single value gain expected over the coming 5 years is the UAE to APAC, which is expected to grow by $716 billion US. So for Hong Kong in particular, in order to balance the volume versus value growth sort of strategy to the city, a focus on these GCC markets could be a really important strategy. Now, the GCC is critical to the value story because one, the region benefits from fast growing wealth. Two, there is now stronger than ever aviation connectivity. And three, evolving preferences from GCC outbound increasingly align well with the APAC offer. And so we'll talk more about that actually on the next slide. But the other critical source region is North America, who represent the region's highest spenders at $2,400 US per trip. Now, there are also important changes happening in North American tourism too, which we also discussed recently in this webinar. Where a sharp decline in US visits from Canada is shifting those flows elsewhere, and APAC potentially benefiting from that. US consumers have relative strength in purchasing power and will be a strong outbound source market for years to come. So we talked about how consumers look to experiences to add value to the trips that they take as a means to travel more meaningfully and to experience the world in a more positive way in a sort of growing global uncertainty context. Experiences, though, as you can imagine, are a tricky thing to pin down. So here I've listed out some ways to think about value growth as you're pivoting to new audiences and looking for ways to leverage experiences to drive travel spending, especially across APAC. For one, luxury or value in a travel context is increasingly about personal transformation, not indulgence. And these moments are increasingly judged by how they make consumers feel and what it delivers to them long term. So wellness, for example, is a core travel driver. Consumers are looking for more purposeful, more values-aligned options, even if that means they take fewer trips in order to make those trips they do take worthwhile. So more about outcomes, less about amenities. Second, bespoke, low-density experiences do matter more than novelty. Now, that's an important shift from the travel market of 2019. Affluent travelers are prioritizing depth over ticking off new places, which makes sense as a driver of interregional trips. So this combines things like depersonalization and precision planning, more nature, space, privacy, low density settings, cultural immersion, returning deeper to more familiar destinations. Basically, exclusivity as a value add now comes from tailoring and access rather than from being somewhere new. And finally, trust, family, and emotional connection also drive spending decisions. High value spend in APAC is strongly linked to who travelers are with and who they trust. So this might be options for family, for multi-generational travel, or preferences for trusted luxury brands over unproven alternatives, or quiet expectations around things like sustainability and responsibility. Now, if you take a step back and you put these three developments in context, I think all three seem to be some kind of cure to the global uncertainty challenges that we discussed at the start of this presentation. So we covered a lot of ground in this very short session, but I wanted to bring your attention back to three main takeaways that we discussed. First, that travel is an ailment to uncertainty. Consumers continuously prioritize travel spending, even during times of economic challenge, because they want to explore the world in a positive way. And travel offers a compelling set of shorter rewards horizons, more meaningful than everyday luxuries, more attainable perhaps than long-term financial goals that are increasingly difficult to plan for. Second, there is this strong intra-regional shift that is driving compelling new travel corridors within the region and providing new growth areas for travel opportunities. And finally, experiences are a critical value driver, and all destinations can reframe their offerings and tap into emerging growth corridors to drive value spending in this way in the years ahead. So thanks very much. I'll hand it back now to Paul, and I think we will have hopefully some time for some Q&A.
Well, thank you very much, Stephen, for that presentation. It actually reinforces a lot of things that Patel has been saying over the past few months regarding the importance of interregional travel and focusing on that, not relying too much on China, as well as, looking at other markets like GCC and North America. Yeah, I know we are at the top of the hour now, but I want to be able to get to the questions that we received at the very least. So we're going to jump right into them. This first question is from Mr. Song, but I think actually, I think Stephen, you got to answer as well. The question is, what is your opinion on offbeat destinations emerging as a new propellers for global tourism growth, such as Northeast India, Western China, Eastern Africa, and insular Southeast Asia? I'll give that first to Professor Song, and then Stephen, you can go next. Professor Song?
Yeah, I think this is a very good question. I think this is to do with tourist travel behavior change post-COVID-19. Our previous research has found out that now, especially younger tourists, are more inclined to travel to offbeat destinations for environmental purpose and also for enhanced experience. I think in the future, the offbeat destinations, especially nature-based destinations, will have a lot of attractions to the younger generations. We've already seen this in China. Actually, domestic tourists in China has traveled to Xinjiang, for example, in large numbers, actually, almost over tourism, because of these offbeat destinations which attract younger tourists. I think, yes, this is have great potential. I think the issue is how the destinations can develop a proper infrastructure to cater the demand of tourists for these destinations.
Stephen.
Yeah, I was going to say the exact same thing. I agree 100%. It speaks really well to that consumer behavioral shift. We talked about how experiences add value to the trips, and that's what justifies the cost in the end. And a lot of the value being added is that ability to step back and unwind, the low density environments, et cetera. And a lot of that can be found in these offbeat destinations. But I totally agree with Professor Song that a lot of that will depend on connectivity. And it won't work if you have to spend lots of extra money in order to reach a destination. So I think what we are seeing and noticing is that these emerging corridors to across Southeast Asia and making connections to Central Asia, et cetera, providing some really exciting opportunities to reach these offbeat destinations like we haven't done so before. And some of the low cost carrier connections and the growth that we've seen there are going to make that happen. So yeah, it's a good opportunity for sure.
Yeah, yeah, and it's that question, I think we actually just organized a webinar a few weeks ago with Airbnb, actually deep diving into the subject. So if you want to learn deep, get deeper into that subject and get some insights from Airbnb's perspective, you can find that webinar on our YouTube channel. It's Pata TV. Just search for it on YouTube. The next question here, I think probably is directed towards Professor Song. What variables are contributing to the decline in Korean outbound travel to Guam?
Well, this is a very good question. Actually, this is because of the data. I think that's the extrapolation of the historical data. There may be some decline in that particular destination, Korean tourism. But possible reasons also because tourists perhaps shift their interest in traveling to other destinations. Guam has been a very popular destination for Korea in the past, but now there's so many new destinations offer, new experiences. Perhaps that's because tourism change, interest and seeking for new experiences.
Yeah, but I know, Stephen, you mentioned too. I guess people are kind of not looking at, looking favorably towards the U.S. because of certain rules. I think you had in your slide you had the 10-year social media history, right? Which I guess that would affect your visa to Guam, right?
It does. Yeah, Guam as a U.S. territory is going to have that challenge. I think that at U.S. generally as a destination does. There's growing uncertainty about traveling to the US in general. And it's not necessarily a specific reason. I think it could be just the fact that political uncertainty, all the changes that have happened politically in the US over the past year, obviously there are implications on immigration and cross-border travel and visas and all kinds of things that are hard to navigate, and they're changing rapidly. So Guam is going to be sort of susceptible to those same kind of basket of challenges. And that reason, Hawaii is going to be the same. And mainland US will be the same as well. So we're doing a lot of work on that at the moment. And I live in Europe now. I'm from the US, so I travel to the US often. And so, yeah, we see the changes and the hesitancy from Europeans also. So, yeah, lots of interesting things around the US at the moment. But I think Guam will be part of that. Yeah.
Yeah, that probably applied to tourists from all source market, not only South Korean tourists, right?
Oh,
Indeed.
yeah. Hey, I'm an American too, and even I'm hesitant to fly back to the U.S. anytime soon. So sticking on the U.S., I guess this question is probably towards Stephen. With the USD depreciating quite substantially over the past year or so, how come you see there's an increase in spending power?
Yeah, interesting question. So I think when we look at what's happening in U.S. tourism right now, the big decline that we've seen is in inbound arrivals to the U.S. for all of the same reasons we just talked about around growing uncertainty, et cetera. But actually, tourism spending is still quite healthy in the U.S. Domestic tourism grew, outbound tourism is growing as well from the U.S. And basically, I think the inbound decline that we saw in 2025 isn't creating any kind of tourism sort of crisis because hotels are still filled. Flights are still planes are still being filled on those flights. And again, there's a strong demand. I think I mentioned this a little bit in my presentation, but I think travel spending generally is just something that consumers continue to prioritize even in economic challenge. And so the U.S. generally has strong purchasing power relative to other regions. And so their travel dollars go a little further when they're traveling to Europe or to Asia, et cetera. And so that's one reason that it still remains strong. But even in that case, we see a strong shift to intra-regional travel within the US, which is domestic travel, given how large the US is. even then, if consumers feel like they're more crunched at the wallet, they're still going to be traveling, but they might stay closer to home. And it's the same type of trend that we saw with interregional travel in APAC. So yeah, I think it's a good question. And the World Cup for sure, keep an eye on that because that will contribute significantly to a rebound in 2026. But I'm not convinced that it'll completely transform the trajectory of inbound arrivals to the US thereafter, but we'll have to see.
Yeah, I think Professor Song, your slide on US travel didn't show, we're getting back to pre-COVID levels for a couple of years.
Yeah, that actually that's a lot of factors that drive the slow recovery of tourism to US. I think the major issue now is politics. Actually, Chinese tourists used to be probably one of the major source market for US, but now actually fewer Chinese tourists traveling to the US. So this actually probably contribute to the slow recovery of US tourists.
Right. Let's try to get to the other questions before we end this here. Imtiaz, I will email your question to Mac. Unfortunately, Mac had to get to the airport, so I will have to email you. But he said he will take any questions via email and then get back to you. So I will definitely send that to him by email. So next question is from Theodore. We haven't heard much about India. India focused on developing 50 plus major destinations and upgrading infrastructure. What is the inbound potential to India? I guess the first part. Also, European countries are counting a lot to India outbound. Indigo's latest announcement of 3 weekly flights from Delhi and Mumbai to Athens, Greece, and from there to the rest of Europe with code share agreements is in the direction of increasing outbound travel from India. So, do you have any information on that? I guess Professor Song first, and Stephen, if you have any thoughts as well, you can chime in as well.
Yeah, actually, I did a presentation to the India Pata chapter a couple of months ago, specifically talking about the forecast for India inbound and outbound tourism. Yes, actually, India will play a significant role in the future in terms of outbound tourism to different destinations. There's no question about it because of the economy has been growing pretty fast. The average income of Indian consumers will also increase, which will be the main driving force of India international tourism. In terms of the inbound tourists to India, it also is going to be significant in the future, but then there are factors that may prevent India to become a major destination, especially the relationship between India and China. There's almost no tourism from China travel to India because of visa policy, right? I think until the relationship improve and there was still a lot of demand from China traveling to India. Yes, India will be a major player in the next few years in terms both inbound and outbound tourism. Although there may be issues exist between India and the other neighboring countries, but then this I'm sure will resolve very very soon.
Okay.
Thanks.
Yeah, Stephen?
Sorry, the only thing to add to that, I agree for sure that the outbound market from India is going to grow fast. It's quite promising, and there are a lot more connections, especially to neighboring regions, that will enable outbound travel. But I agree also that there are challenges with the inbound arrivals to India. And one other aspect of this, and it's something we kind of talked about in the presentation, is just the idea of these growing regional bubbles in Southeast Asia and also in the GCC markets. There's so much investment also in the Middle East and the GCC regions to attract their own inbound tourism as well. And so India is kind of stuck in between, I think, these big emerging bubbles that are attracting lots of inbound arrivals in Southeast Asia and in the GCC markets. So it's hard to say whether that's a direct competition, but again, because India is neighboring all of these really attractive inbound markets as well, there is more competition for that sort of inbound traffic. So I think India is also dealing with that to some extent.
Okay. All right, let's try get a couple more questions and then I think we can end this here. Uh, so I guess next question is thanks for all the insightful sharing. May I know any forecasts on the Chinese travel spending in 2026 onwards? Conservative or still willing to spend in international travel?
Right. Okay. Actually, the forecast, although mainly focus on arrivals numbers, but then the expenditure, at least based on the data in Hong Kong and Macau, we will see the average expenditure of Chinese tourists has declined quite a bit. I think by 15 to 20% per capita expenditure. That is because the Chinese economy grow less than the expected growth. So the increase of per capita income increase was also not as we would expect. So that's why the tourist expenditure declined by Chinese tourists. And also the Chinese tourism substitute domestic travel to international travel. So they travel domestically more than international travelers. That is all to do with the economic condition in China.
Okay, I guess the next question here is, this year's Chinese New Year holiday marked the longest statutory holiday period in recent years. However, this extended break was achieved through the adjustment of regular work days. As China's economic growth slows, the government is considering more holiday adjustments to stimulate domestic tourism. What impact will this have on travel within China?
Oh yeah, that's certainly is a policy to encourage consumption from all fronts. Actually, travel is one of the things that the consumption can be improved. I think any policies that will contribute to allow Chinese citizens traveling within China, within the country will help. Actually, especially this year, the extended Chinese New Year holiday does see a huge increase in terms of travel within Asia within China between different regions within China. That will help in terms of boosting the tourism consumption.
Yeah, I mean, something that Thailand does quite often too, extending holidays or adding additional holidays to sort of spur domestic travel. So I can definitely see that increasing sort of domestic travel within the country by adding additional holidays. So Imtiaz did want me to ask this question to both of you. So we'll end this on this last question because this seems like a pretty complicated question. What is the likely impact of an outbreak of conflict in the Gulf? Hubs like Dubai, Doha, Abu Dhabi will be very badly hit. What are the emerging scenarios and how should destinations in the Asia Pacific region prepare for it? Stephen, you want to start first?
Sure. I mean, that is a difficult question. Yeah. Obviously, there is an impact. There's a spillover effect, and we know that because we've seen how conflict in Gaza has had a spillover effect. And I think I had that figure even to neighboring countries like Jordan, which isn't directly involved in the conflict. For the same reasons that consumers tend to avoid destinations when there's growing uncertainty over regulations, entry rules, whatever, for the same reason that there's hesitation to travel to the US right now. When there's regional conflict, that also tends to be a factor that consumers make a decision. And I wouldn't say it's I mean, it depends on the situation and it depends on what we're talking about for a scenario, but I wouldn't necessarily worry about that long term. But in the short term, if we're talking about, the weeks and the months where the conflict is taking place, then for sure, consumers will need to reconsider traveling there. And there might be, it might be that the destinations are closed, it might be airspace is closed, etc. So it causes all kinds of operational challenges as well. So yeah. But again, I think in terms of preparing, I wouldn't. I would keep doing what you're doing to attract consumers in the right way and show that your destination is a good, attractive, and safe place to visit. Yeah, that's pretty much all you can do, I think.
Mr. Song, any thoughts?
Yeah, 100% agree with Stephen's assessment. And also other destinations could actually take the opportunity to benefit from this conflict. It's it's not in a negative way, but tourists will certainly switch from traveling to the areas, regions that has conflict and to other safer destinations. That's normal, right? So destinations can prepare and take advantage of this.
And I would assume, I think Stephen and even Matt had mentioned this, the importance of interregional travel. I would assume, if there was some conflict in the Middle East, you'd see a greater rise of interregional travel in the Asia Pacific region, right? Because people wouldn't want to even have to fly towards that airspace at all, right? So I think that's
Indeed, and it's more expensive too when you have to. It costs more, frankly, to fly around a no-fly zone, and so these types of trips just become more expensive, and it's just another deterrent in the end. So yeah, I agree with the interregional aspect.
Okay, I'm going to ask this question because I know Professor Song, we talked earlier today about AI, so I do want to ask this question of you that we just got here. This is the last question we'll ask before we end this out. So this is to both of you. So how do you think AI will drive tourism in the next decade with chatbots and AI-powered travel agents working as helping hands? So Professor Song, I know you're doing a lot of research. Your team's doing a lot of research on this subject. So that's why I wanted to ask this question, and so feel free to answer it.
AI will certainly significantly influence the future tourism in terms of tourism planning for tourists and also tourism experience in the destinations where AI or any technology will be used to benefit tourism will benefit from the future growth of tourists in the destination. Actually, if you are interested in the debate and discussion of AI on tourism, please do participate in the PATA summit. We will have a specific session on AI and tourism.
Yes, that's correct, Professor Song and a couple of colleagues, as well as a couple of industry players, will have a panel discussion about AI and tourism, which is a big subject. So if you haven't registered now, it's a perfect opportunity to register today. Stephen, your thoughts on this last question?
Yes, of course. AI is going to be a really big driver of change in the travel industry. There's several reasons for that. One, because so many people have access to AI and are using it every day anyways. So if you think about maybe one of the first times that you ever used ChatGPT, for most people is probably like, what should I do in this city that I want to visit and create an itinerary for me? That's such a natural human response to that kind of technology. And so it's naturally fitting that would be incorporated into these digital booking platforms, to the websites, the booking websites from different operators, et cetera. It's a natural technology, a natural touch point that is becoming so commonplace. So that's one reason. But actually, I think the more impactful thing about AI is going to be the quiet sort of improvements to the technology in the background that will make that will drive value, frankly, to the booking process. So, for example, the increased personalization aspects where you can not just look for a hotel in the destination, but rather you find the right room that has the right features that can accommodate your dog, that's got a view of the mountains or whatever. Like these types of little things will start becoming more personalized to you, and you're going to want to spend more for them because the value being driven by those opportunities. So in the end, these little connections, it's also the subtle upsell moments you can imagine during booking a trip, that match an experience to the destination, to just to based on your profile. So all these little things are going to add incremental value, and it will be a huge driver for sure. So a lot of promising ways to incorporate AI, I think.
Yeah, I even read the other day that OpenAI was going to start introducing ads to ChatGPT, and travel would be really sort of one of the big sort of spenders on ads for that. As you said, planned my trip for 3 days in Japan, for a family of four. So I can see AI really taking a lot of that lot into that space. All right, we've gone over time, but thank you so much for spending the extra time to answer those questions from our participants. So once again, thank you, Stephen, thank you, Professor Song, and thank you, Matt, for today's presentation. Extremely insightful. Said if you want to learn more from Mac and Professor Song, feel free to join the PATA Annual Summit. Stephen, maybe some of your colleagues from Euromonitor might join us. So I'm still waiting to hear from you, so to get back to me. But yes, please do join us at the annual summit. And with that, let me just say goodbye, and I'll do a quick wrap up before we finally end this. So thank you so much, Stephen. Thank you so much, Professor Song.
Okay, thank you.
Thank you.
Okay, let me just pull up my slides real quick. Sorry. Okay. Okay. All right. Well, today's presentation for the Asia Pacific forecast, tourism outlook 2026-2028 is in line with the availability of the Asia Pacific Visitor Forecast Executive Summary, which is available now at the PATA catalog. If you are a PATA member, you can download your complimentary. You can download it on the Info Hub. Just so you can scan the QR codes there. If you're a non-member, you can purchase it now at the PATA catalog. Sorry, the publications on the PATA website. Any information on how to retrieve your report, feel free to email me. I'll show you my email address at the end of this quick wrap up here. As I mentioned before, we have our PATA Annual Summit 2026 coming up in the two cities of Gyeongju and Pohang. It's the first time our annual summit is being held in two cities. We will also be celebrating PATA's 75th anniversary, as we were founded in 1951. So please do join us at the PATA Annual Summit. We will have our, not just the day and a half conference, we'll have our executive board meetings and AGM. So if you're a member, please do join us to vote at the AGM. We'll also have our industry roundtable, our education roundtable, and our PATA Policy Forum, as well as our youth symposium and destination experiences and comp tours. So please do join us. Information about the event is on our websites. Later in the year, we have our PATA Travel Mart 2026 taking place from August 18th to 20th in Kuching, Sarawak, Malaysia. My team is right there now doing the site visits. We've been to Sarawak before. It's a beautiful destination, so please do join us. Registration for buyers and sellers is still open, so register today. And more information about the event will be available as we get closer to the event dates. Again, if you have any questions about today's webinar, feel free to email me. My email address is here, or for more information about PATA or publications, our previous webinars, like the one I mentioned before earlier today, the Airbnb webinar about off the beaten path destinations. Feel free to check out our website at www.pata.org. Just one quick note. I know probably you're questioning or wondering, the presentations will be available for all registered delegates. They will be emailed out to all delegates in just a week's time, as long as a link to the video of today's webinar, which is available on our PATA YouTube channel. So with that, once again, thank you to our speakers, Stephen, Mac, and Professor Song from Euromonitor, Hong Kong PolyU, and OAG. And as always, thank you to our PATA Executive Board, our PATA Board, our PATA Life partners, life members, chapter members. Without your support, none of this is possible. And last but not least, thank you to all of you for joining today's webinar. Take care, have a good day, and I'll see you soon.